The weekly chart of Bharti. The price is currently at a good area of support. If we zoom out the chart, we see that the support is very strong. Many rejections being faced by the same area again and again. Now the price is at the same area of support. Do we have any bullish indications from the weekly? No. No other bullish indications except the fact that the price is at a support with a minor wick rejection, not so significant, but the body size is clean red. So no bullish indications from the weekly chart. But if you look at the RSI, if I switch to the line chart, what do I see? I see that the price is making lower low, but the RSI is making higher low, right? So from the RSI we are getting a PRD, positive reversal divergence. Divergences on the weekly charts are again stronger than those from the lower time frames. So this gives us a mild positive bias from the weekly. Apart from that, there are no other major bullish indications. Let me go to candlesticks and let us go to the daily chart now. What do I see in the daily? On the daily chart, I see clear bearish momentum, nothing which signifies bullishness. So there is no scope of entry as of now. So I will just wait. We will wait for next few candles. What do we get? See, we already had one moderate PCC, another we are again having a good PCC from the daily chart. Now this gives us some sort of bullishness from the daily because there are two good PRCs on the daily. However, we have to keep in mind the current bearish momentum, so we have to be extra cautious while going long. Let us look at the 75 minutes. What do we see on the 75 minutes? Okay, in the 75 minutes we see a clear downtrend. The price is now respecting or rejecting this weekly area of support. It has done it once here, again it has done it twice. This time it was the second time when the price hit and got bounced. An important thing here to note is there is another PRD. If you look at the price, it is making lower low. If you look at the RSI, it is making higher low. So there is another positive reversal divergence occurring, which gives us a bullish indication from the 75 minutes. So now we have moderate confluence from the daily and the 75 minutes. Since this is an old chart, I am not able to access the intraday 50 minutes time frame, but focusing on just the 75 minutes, let us see if we get any indications, if we get any trade entries. Let me draw a trend line. A trend line would be possible here, like this. So we can say easily conclude that the trend line is already broken in the 75 minutes. So apart from the PRD, the trend line also is broken, which gives us a mild positive bias from the 75 minutes also. Now we are looking for an entry in the 75 minutes, having received bullish confirmations from the daily, mild bullish confirmations I would say, looking at these two PRCs which stack up perfectly, and the divergence in weekly as well as the 75 minutes time frame. How do we take entry? We look for confirmations. Now the confirmations have already occurred by this divergence and the break of this trend line, right? But since the break of this trend line has already happened, and only then we could spot this daily PRC, so we now are left with another, we are now left with no option than to wait for another confirmation, right? So let me bring in the new candle. See, this next candle is a perfect is a good rejecting candle, which is rejecting this broken trend line. This gives us a good entry signal, right? One could have entered long with this PRC because we have established bullishness already using the 75 minutes also. So this candle, a PRC would be a nice entry. So I am taking you through a step-by-step analytical approach how you have to identify and take trades. You do not have to hurry up in any moment. If you are not convinced with this candle, no need to take this trade. Just wait. Wait for another confirmations. If you get, you trade. If you do not get any confirmations, you skip the trade. Let us see. No confirmations yet. Nothing. Not yet. Okay. Now this is a PCC which is broken out of this neckline of this W pattern, right? A moderate W pattern with a lower high. Not a good W bottom pattern, but a moderate W pattern. So this green candle is a breakout candle of this area. So if you are a conservative trader, you would enter right at this candle, enter the close of this candle, and you can keep your stop loss somewhere here. below the low of this candle, and you can aim for 1.3. Let us see how the trade plays out. And we get our targets like this, right. So, there were two entries here. One entry was here, the other entry was a safe entry, which was a entry from the breakout candle. You could have even had a tighter stop loss in this case, somewhere here or somewhere here, depends upon your methodology, depends upon your style. You can place it wherever you want. So, this is how we are using the RSI indicator in combination with our classic trading course techniques. Basically, this RSI indicator will allow you to address more trade opportunities whenever the price action is not so good at the important areas of supports and resistances. So, one thing you must notice is we do not use RSI indicator as it is, like anywhere if the divergence is occurring, we do not just use it like that. We only look for divergences to occur at important areas of supports and resistances, and most of the time we will be using the reversal divergences and not the continuation divergences, because when the price is at support, we need a reversal divergence to get it bounced from that area of support. When the price is at resistance, we need a reversal divergence to let it move down from the area of resistance. Thanks for watching. See you in the next video.